Welcome to FX, and here we're looking at the US dollar, and the US dollar has got a resistance at the midpoint here, the 80.50, and the other point here is that the retest here of 80.50 is in 3 waves, so it makes it corrective, so we should take out these lows here. Okay, so this puts the euro and many of the euro crosses into a positive light. So looking at the euro here, we do have long positions in the euro here, and I suggest moving the stop under well, we already had it here anyway, 13563, I think. And you know, if in the European session you see strength above the 136, then look to add to the positions on 136, 10, 20, and 30. If support is found on 30, then we can expect these highs to be taken out here. As far as the wave count goes, I don't want to lead you astray. It's just not that clear from this low here, and that's the low here. We can just still count 3 waves up here. So, you know, it could be corrective. All of this here could be, yes, we can make new highs in that, but it could still be an A, B, and C for an A wave, back for a B wave, and up for a C wave here. Okay, so I don't know, it's not clear, so we're just going to use the levels and direction. So we expect the US dollar to break lower, so this should move higher, and being on support of 136 with some momentum coming from the European session or maybe the Asian session, then look to add to those current positions that we have there. Right, the Australian dollar. Now, this is the weekly chart here, and this has been my primary count since we've been counting 5 waves down from wave 4 down through here, and picking this low here. So what we've been sort of working through is 2 patterns, one being positive, being this one here, and that would be well, across the $1 here, in a bit of a nutshell, the A wave, the B wave, and the C wave down here for a large wave 4 here, and a wave 5 to take out this high here. That's what we're looking for. We're not out of the woods yet, but we have moved forward in the sense that from this low here to this current high here, that we are looking at a 5 wave structure up through here. Okay, so that's good news. However, this 5 waves here, there's still another bearish count, and the bearish count, if I can just bring it into the fold here, would be this one here, where it just has a slightly different, it's an alternative count, still has the A, the B here, but it has this here as wave 1 here, wave 2 to here of intermediate degree, and wave 3 all the way down to here with 5 waves in it, 1, 2, 3, 4, 5, and then we're looking at wave 4 here to pull back to the wave 4 of 1 lesser degree here, or 38.2% of this move down here, which we've passed now, which is the 38.2 retracement levels in this block here somewhere. Now, this wave 3 here, so we can have an A wave in 5 waves, a B wave in 3, 5 in C, and then make a new low down through here. So this one's possible. It just doesn't have the same bias as this one here. No matter what the RBA put out as messages, the other central banks and other large players know that the squeeze on the situation will have to see rates go up, which will obviously, you know, push this up as well. But our job now is really to look at this particular structure here and figure out what's what in here. Where are we within this 5 wave structure here? And that's what I want to point out now. And in that 5 wave structure here, we've been looking at this here all as wave 1 here, 2 here, 3 here, 4 here, and we're looking for wave 5 to move up here. So wave 5 will have 5 waves in it through here, and that's what we're sort of pinning now, because after we get 5 waves, if we just roughly here, just take this from this low here up to say 95, then the 61.8 retracement level is back down at 90 here. So it is possible from the 95 or this area up here that we actually see an ABC correction as wave 2. So these 5 waves here would make wave 1, and wave 2 would be here, and then we'd see a move up from there as a wave 3. So that's possible. So what we need to do is we need to look at this, try and get some sort of understanding of this wave 4 to wave 5 up here. Now, yeah, I guess there was an extension in wave 3 here, so we can look at wave 1 here being much the same size as wave 5 here. But I wouldn't hold my breath on that. It looks like there's a fair bit of equality within this structure. So our main job is to work out this 5-wave structure here. So drilling into that, thought I had a 4-hour chart here. Anyway, from this wave 4 here, then the the probable count is that I know that on our chart we've got this as a bit of a triangle pattern in here as a wave D and E here, but I think I'd just like to take the conservative view here all the time. So we'd look at this as wave 1 and wave 2 here, and then we'd see a nice wave moving up here as wave 3 up here. Then wave 4 moving back into here, and then we're looking for wave 5 to move up. Now, all the wave 5 needs to do is take out this high here, which it has done here. That's sufficient for that. So we could put wave 5 here, but it just doesn't count very well as 5 waves. It could do, it's just that this here is all a bit messy here to count like 1, 2, 3, 4, and 5 here. But we do need to take it on board. So, you know, wave 5 could be in play here. The other point is that wave 5 could extend, you know, further up through here, and would be looking at this as wave 1 here, wave 2 here, this up for wave 1, back for wave 2 here, and the wave 2 here back in at the 61.8 retracement level through here, which is actually, well, the 61.8 is actually on 94, and the 50% level is at 94.10, so basically that low there. So while this structure here stays intact here and continues to move up, then obviously we're going to be moving up, and we'll run with this 5th wave being higher up at 95 here, and that's fine too. However, all I wanted to point out in this whole sort of gamut here was that currently, if this low here gets taken out, the bottom of this wave 2 here, then we know that then there's going to be a larger correction occurring, and we'd probably have to first of all put this here. There may be other options, but we would have to put that there, and we'd be looking at a larger ABC correction to come into play here. So just pointing out that this particular low here, we can call it 93.72 here, would need to stay in place. So any long positions that you have here, if you're still in them, any long positions here, then that would be the logical place to put the stop under there. So yesterday, what we were looking for yesterday is we understood that we had this particular ABC pattern here, an A and a B and a C here, and we also understood that the figures are coming out from China. We knew they were at 49.4 from last time, and it had an estimate of 49.9 or 7 or something, but they went over 50, so obviously causing a spike in that thing there. So we got our move up. We got as far as we can predict so far. So this little move down through, this little move up here is a really nice looking impulse wave, and we're looking at the 61.8 retracement level, which is 94, and the 50% at 94.10. and this is what it looks like here. So we do have a beautiful structure up here in terms of a nice strong third wave here, the 1 and the 2 here. This was our ABC correction from yesterday. So I guess, you know, as long as this 94 stays in play, then we should see further upside and the trend continues. All I was just pointing out in the bigger picture, if this little guy here gets taken out, then there's a problem in paradise at that point. So look, in terms of building the trade to the upside, we'll keep the stop under here, and in building the trade to the upside, the 94.30 as a support, nice tested support, will get us higher up through there. In fact, you could probably go long off 94.20 on nice tested support, but don't overtrade. Keep it extra small and look to add on 30, add on 40, add on 50, because you know you'd be on the right track to the upside from that point there. All right, that's my 2 cents on that. The Euro Australian, we were looking at just on the daily chart here, we were looking at the 145 as being a resistance here yesterday, and we're looking to, well, suggesting to short from the 145 down. So I want to take a closer look at that now. So, oh, here it is here, just on the smaller picture here, sorry, on the 4-hour chart. So we were looking at, I mean, this move up here counts quite nicely as an A wave, a B wave, and a C wave, okay? So, and then we had this sort of retested here into the 145 here, and we're looking to short here. That sort of played out okay. It's coming to the 144 where you'd expect support down through here. So we need to sort of investigate all of this here, but I do want to point out that firstly, that yes, the trend is down, but secondly, the Australian could be quite strong as long as it stays above 94. But we also know that the euro can be strong now too, pushing up as the US dollar drops. There's a direct mirror relationship with the euro, of course. And being on 136 there, the AUD is not in the basket of the US dollar index as such, so no direct relationship there, but has sentiment there. So this wave 4 here could get complicated. We could have a wave A, and then a wave B in 3 waves, and then a wave C here, and then we could move down. We could also get a triangle pattern, which would give us another wave here and then a move down. It's possible. But for the time being, if we just play this possible card here, it's quite viable to do this, and this is what we need to do. So if that's the case, then we would label this it may not be the case. It could just drop right from here, okay? And we're going to have a look at that. But I just want to put these on the table here because this is what we do in the morning report. We get a chance to sort of explore things. So it's quite possible that this can be an A, B, and C here and have a retest here. And that would give us 5 waves up here for the C wave, and then rolling over from that point here and setting 5 waves down. So just keep that in mind. Now, coming into the 1-hour chart here, obviously it gets a bit confusing because I've got different labels all over the place. That's the original wave 4 here. And as I just mentioned, then in the blue wave, just in the previous chart, we had the A wave here, the B wave here, and the possible C wave up here to make another wave 4 here as such. A more complicated, well, not complicated, it's quite simple really, an A and a B wave in 3, and that would have us here as the A wave, the B wave, and a nice looking C wave, by the way, as wave B here, and then wave C up here. The other count is bearish, and the count would be leaving wave 4 over here, and looking at this down as wave 1, like we did yesterday, coming back for wave 2, and then we'd be moving down for blue wave 3, which would be, if I just judge that, which would be down here, and we'd be looking for 5 waves down here. So 5 waves between wave 2 and 3 here would pan out something like this here. So we would look this down here as wave 1 here, back for wave 2 here, pulling back up the 50-60% retracement level, which would be basically, if we can just clarify that as the midpoint here, closest, largest, strongest number. Still 144 comes in pretty good as well, 144, 44. Anyway, enough rambling. Wave 3 to move down here. So 1, 2, 3, 4, and 5 to move down. So that's the possible move down there as well. Now I just want to drill in here, and you're probably already aware of this if you're trading this market. Two things here. First of all, this gap here. So this gap comes in at 140, 144, 56 or 57 here. So if we round that off to the closest, largest number, there's 57. So if we look at a possible retest of 144.60 to cover that gap here, okay, so that's a real possibility into this 61.8 retracement area here. But at the same time, if that moved up through there, it kind of gives us a nice like 1, 2, 3, 4, and 5 waves here. So it doesn't give us a nice clear like 3-wave correction here as such. It's possible, but it sort of bends to this one more so than this one here. So I guess what we could do is that if you're looking to short this market, first of all, it would be important to cover this gap here. Okay, that would be an important part of it, because if it doesn't cover the gap, it could do this. It could trap you. It could come up to here, not cover the gap, come back, and then knock it out from that point. Do you know what I mean? And then come down through here. The other side of the coin is that this is the main block of price activity here. So you'd really want this as resistance. So you would see the market move down here and find support anyway and bounce back in 3 waves here. If it bounced back in 3 waves here, then you could use the pivot here, the 144.20. If that becomes the retested resistance, then you can short from that point there. So look, they're the two sort of pictures here at the moment. I know that's all a little bit messy, but that's how the cookie crumbles. Okay, so the pound yen, the yen crosses. Just before we go to the yen crosses, like we did yesterday, we went and had a look at the US dollar yen here, and we were talking about, I'll just go back over this. We're talking about this here being in 3 waves here, being corrective. So we're looking at a bearish move down through to here. We're also looking at this particular little correction in here, which is also in 3 waves, same as this, just smaller. And, you know, that means that we should see this high stay in place here, and we should see new lows below here. So then we're moving into this section here. We were above here when we chatted yesterday, and we were looking at this being in 3 waves, possible 3 waves here. And that seems to be the case now. So we've got, this is a correction, this is a correction, this is a correction. So you'll see another little tiny one in here, because this will be 5 waves down here. So you will see another one retesting in here. So this is going to offer a, a short trade in here. Yeah, just sort of, this is just on the 4-hour chart here. So you can look at shorting this here. There will be support this one here. You have to get this on the intraday chart here. When this market retests the when it retests the 102 here or even higher, it will eventually move through here, but it will come back and retest in here before it goes down here again. So you can use the 80, 72, and 65, the 72 to add on as well. So anyway, try and see if you can build in a trade through here. The pound yen, what I would like to do here is that there's a couple of things here. First of all, we were looking yesterday, I'll go back over this. Yesterday we were looking at this being a impulse wave up, a corrective wave here, and this also is an impulse wave. But it's a little bit tricky to count, because I figured I did the right thing here going wave 1 and wave 2 here. Wave 3 goes up to this point here because that's like a 1 and 2 in here, 3, 4 and 5. Maybe wrong, but it's sort of the best fit, you know. And then we're looking at this little 5 waves here. Now, in this little 5 waves here, just because I've labelled this here, the 5th wave here, it may not be the case. We may end up having something over here further, but it does seem to fit okay here. But if this move down here it's in 3 waves so far, and that will be confirmed as 3 waves when this market moves up through here and takes this low out here. And that's what I want to talk about, because then it puts it in a bullish mode. So as you know, over the last few sessions, we've been looking at a bit messy in here for 1, 2, nice clean 3rd, 4th, 5th here. But this here looks like an A wave, a B wave, and a C wave down here. Well, from that point there, actually. But that's here nor there. So a move up through this low here, would confirm that this is an A and a B and a C here, and then would be taking this top out here. So a nice tested, it's likely to move up here, hit the supply level, and then come back down and test this here. So once it's got tested support on the midpoint at 173.50, then you could look to move into this position here. Okay, so a move up into this wave coming down through here would create overlapping wave structures and put this in bullish mode. We know the pound is strong. Yeah, so the other thing here is the 173.72. If you can't figure out how to get in here, then wait for 173.72 to become the support. And also the euro yen as well. It's in the same little boat as well. Yesterday we were looking at counting 5 waves up from here. Now this one here is a little bit lower than this, so this may not be correct in having this as an A and a B here. It can be the wave 5 completed here. But our main point is that we were looking at 5 waves up through to here, and it counts best as an A and a B and a C back into this trend here. And then the same thing's occurring here. This move up through here is moving through the low of this one here. And even if it wasn't this one, even this one here now that it's up in here is starting to create overlapping wave structures. Yes, there is a lot of resistance within this zone here, 65, 72 and the 80. There is resistance there. There will be a reaction there. There is this trend line coming through here, and that's just coming through from the old high up through here. So it appears to have some sort of use here. So it'll probably have some sort of use here as well. So looking at this moving up here, don't race into it. Wait for it to consolidate, look back, look a little bit healthy and strong, and then start to move in on 138.72 and build in from that point there. Because if this is correct, then we should see a move looking back up to retest the 140 area through up there. So, but one step at a time. The idea would be to get a position here, keep the stop under here, and look to add on top of 39. So you can't move the stop up under group 2 until the 39 has support. And the trouble with support here is that, well, it's not a trouble, it's just the fact that it's like this whole block here is going to be the test here. So you don't want to move your stop up into here until this has come down, tested it, come up here, found support on top of 39, and then moved off here, and then you would move your stop under here, and then as 139.30 becomes the support, the top of group 1, then you can bring your support up to this, your stop up to this point here. Alrighty, yes, so yeah, do all the right things here, because this particular move up through, that's moved up through here, has put the daily chart into the oversold, overbought area. So there'll be resistance here, and also above the 139 as well is the 61.8 retracement level from the previous move down from 140 down to 138. So there's going to be resistance here, so it's just a matter of is it strong enough to build a nice big corrective support on this level here. Alrighty, that's it. Cheers.